Ark Invest just gave a what will now be considered a controversial take on Tesla's energy storage business. Ark Invest's chief futurist Brett Vinton gave that take in an interview with Meet Kevin, so let's take a look.
And this is true also of Tesla's
solar division.
Yeah, their solar division. We haven't incorporated that into our model in a profound way, and it's in part because an electron is an electron, and so it's hard to. I think it's hard to kind of differentiate over reasonable time horizons and get good margin on that. I think
that'll compress, in other words. So margins could be very high on those home batteries today. Maybe, I mean, some of these margins on these home batteries are 50% today, but your expectation would be that those are going to go away.
Well, yeah, I mean, I think, it's possible that Tesla has like a sales advantage and that they're already selling in a vehicle to someone's house, and then that person is having to deal with an electrician anyway if they want to install a charger for their car, and so then they'll buy kind of a Tesla battery and solar system on top of that. I think Tesla would argue that we can sell more efficiently to utilities because utilities need lots of data that these systems work, and the utilities are less cost sensitive than they are reputation sensitive, and that they know the megapack systems work, and so that Tesla will have a durable advantage on that basis. And it's possible. It's just not an area that that I'm confident will necessarily accrue a lot of cash flow over time relative to for Tesla, relative to electric vehicles and robotaxi, where I think it's very easily underwritable.
It is not often I want to disagree on Tesla stock with Ark Invest, but on this one, I would have a slightly different opinion. I think Halter Ferguson Financial on page 6 has some very good insight about megapacks. The entire company was initially battery cell starved, and automotive applications were given priority over Tesla energy. The lumpiness of battery supply translated directly into the lumpiness of energy revenues. These fits and starts led many to believe Tesla Energy did not contribute to the valuation of Tesla. Furthermore, the lack of consistent supply or a dedicated manufacturing facility meant that margins were far from optimal. When battery constrained, there is no way it is going to make sense for Tesla to just sell these batteries as battery storage units. Another reason why I think the energy business is going to be at least as big as the auto business, and perhaps even bigger, is because that is what Elon Musk himself believes.
And then the home solar side is, that's so sales intensive. Convincing people to install solar systems is really, really hard work, and it's a very complicated sale, and so, yeah.
Yeah, that makes a lot of sense. And it's pretty sales intensive. My goodness, I think I see a Tesla or a solar panel ad. Get solar for free. Click here.
Right. Or it used to be, they'd literally go door to door to try to convince people to put solar on their roof, and that's, it's hard. That's hard.
Yeah. While the solar business certainly proved to be quite challenging, the megapack business. Right now, if you go to Tesla's website, you will have to wait until Q4 of 2024. Not this year, Q4 of next year. You do not need to sell these megapacks. These megapacks sell themselves. You just need to make them. And while Tesla may not achieve 50% margins, that would be so high, I would expect at least somewhat decent margins. Look at the Nevada factory expansion that Tesla announced recently. This is the current footprint. This is the new battery factory footprint. Currently, Tesla makes a lot of batteries in the factory, but this little thing is going to make a lot more batteries than Tesla previously was able to make in this giant footprint. Just so that you understand how big of a deal that is. This expansion of 4680 with annual capacity of 100 gigawatt hours Elon Musk said the cell factory will have capacity to produce enough batteries for 1.5 million light-duty vehicles annually. That is more than Tesla produced last year. And Tesla buys a lot of batteries from other companies still. I mean, up until now, Tesla in that factory only produced 1.5 million battery packs. It will be able to produce that many every year once this new factory basically reaches capacity. One of the reasons why Tesla will be able to put so much output from such a small, relatively speaking, facility is because of a dry manufacturing process that Tesla is planning to use. And this article says here, Tesla might be able to manufacture batteries at half the cost that can endure a lot more charge-discharge cycles than the current batteries. So I wouldn't write off the whole energy storage business off that quickly and not give it a meaningful valuation in the future. So I think now this Ark Invest stake on Megapack is going to be controversial among us retail Tesla stock investors that think energy storage is going to be a big and an important part of Tesla's future.
Is it more or less likely that people are going to consume less oil in the future? I think people are going to consume less oil. Are people going to buy more electric cars or fewer? I think they're going to buy more. And it's pretty obvious. It's not like there's
Start
not
with that simple idea. Yeah. Okay.
There's not a, is like, is AI going to be more performant or less performant next year? It's going to be more performant. There's going to be like multiple Bing bots arguing with each other on our behalf to like try to adjudicate an insurance claim, right?
Another obvious innovation that is going to happen, in my belief, is going to be full self-driving. You look at the number of parameters in AI models, they are increasing by 10 times per year.
In business model transitions like is happening with AI, new major companies will arise that accrue monumental amounts of value. And if you look at the history of technology, it's usually like another step change larger. So you'll see a $10 trillion company, or maybe even more, maybe a $20 trillion company arise on the basis of AI.
That sounds like Tesla to me.
And this is like when you still have innovation exposures, selling at a discount, and you're in the midst of the technological boom, the right thing to do is expose yourself to more innovation. We think that more than half of global equity market cap is going to be exposed to the disruptive innovation platforms that we focus on over the course of this business cycle. It's naturally volatile. Like there's going to be lots of bumps along the way.
Translation, more buying opportunities.
And I think that there's, I'm more confident in that assessment than I've ever been, because the rate pace of change is mind-blowing right now.
I mean, right now, the way I look at how funky everything is, I just say, look, when McDonald's outperforms innovation, it's probably time to buy innovation.
Yeah, I remember how about a month and a half ago when Tesla was trading close to $100, I looked at McDonald's and I said, the reason why Tesla's stock PE ratio, the forward one, is basically the same is because McDonald's is a direct competitor. We are working on fully self-delivering cheeseburgers. That is a real threat to Tesla's business. While Tesla's forward PE ratio, I would say, is still a little bit silly because of how low it still is, it is not as absurd as it was when Tesla stock was trading close to $100. The market decided, which is always right and is never wrong, and it never panics, so it always makes sense, and it's always perfectly logical. The market decided that, unfortunately, Tesla will win the fully self-delivering cheeseburger race. Unless the market freaks out again and decides that McDonald's is going to develop a fully self-eating cheeseburger, which would be quite a bit more innovative than the Tesla's fully self-delivering cheeseburger. It still absolutely amazes me that the market let Tesla's PE ratio, the forward PE ratio, drop to the level of McDonald's.
Yeah. Well, and it's like, McDonald's is a great business.
The franchise model is brilliant. Yeah.
It's just a different business. And and I think that there's, the cash flow that will accrue off of technology, ultimately people will pay for that cash flow. I think these markets literally, at least as we model them, they measure in the trillions of dollars.
And yet, the market cap of Tesla stock is nowhere even near $1 trillion. It's only 652 right now. Sounds like a buying opportunity.
If you look at the entire raw material stack going into electric vehicles, cobalt for us was more of a concern because cobalt is co-produced with, I think it's copper and tin, maybe? Anyway, it's co-produced. Sure. So as in, if I give you a big price signal for cobalt, that won't necessarily drive the economics of bringing on more cobalt supply, because you could have a cobalt price signal without the underlying elevating, and so you wouldn't increase production. Lithium, on the other hand, a miner sees the lithium price and it's like a big blinking dollar sign, like produce more lithium.
Right.
That's
Elon
what
said
the
that
price
many
signal
times.
does. Yeah.
You want to get rich, go mine lithium.
And if you look at reserve to production ratios in lithium, they are extremely high, meaning there's tons of lithium out there. You just need to bring the mines online. If you look at our forecast for electric vehicles, which is more aggressive, I think, than at least anyone to my knowledge, the amount of capital expenditure in aggregate required to support that, to bring on additional lithium supply is $30 billion. Okay, so relative to, it's something like the OEMs have announced $600 billion in capital expenditures for electric vehicle programs. So it's actually not that big an amount of money to bring on the lithium. And in the history of commodity markets, when people are pointing at, there's going to be a huge supply problem 5 years from now, that usually doesn't turn out to be a supply problem.
We were supposed to run out of oil 10 years ago, and then we found fracking.
And so if you look, I think you can go back over any commodity super cycle, and people are always like, we're going to run out of copper.
Someone certainly comes to mind. Lithium is going to be a problem. I mean, Peter Zeihan, who is a famous geopolitical analyst, and he did predict the boxing match between Ukraine and Russia. So for that, I give him full credit. But he said Tesla stock is going to drop something like 90%. So naturally, I made a video. This ridiculous Tesla stock FUD needs to stop. And in this video, I fully dissect Peter Zeihan's claims, most of which are just factually completely wrong. If you haven't seen it, you have to watch this one. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video right here or here. Thank you so much for watching.